You are in the right location. You are at Adasina Social Capital's Extractive Agriculture webinar, presented to you in collaboration with ETC Group. So you're in the right place. Takes a little bit for folks to log in. We're going to respect the fact that all of you are here on time, so we won't take too long.
Yeah, no, I'll start in just a minute. Our ops person was there's a few people that were having an issue logging in, but it looks like several of you are here. So I'm going to do a slow entry into the topic. But as Rachel said, if you are here to learn about extractive agriculture, we're going to spend the next hour talking about what extractive agriculture is, why it matters, and what we can do. And if you hear some ringing, I'm in an office that used to be a church, and I guess the church still has bells. So that should stop in about 10 seconds. And so you're in the right place. Really excited to talk about extractive agriculture. I've had the distinct honor of working with Jim and Kavya here for the past 18 months or so, and excited to present all of the information and results of just a deep dive on the behalf of ETC, of the work of ETC. So I'm going to start by introducing Adasina. For those that don't know, Adasina Social Capital is an investment firm that specializes in social justice investing. And what that basically means, and I'm going to have Rachel take a deeper dive into that in a second, is that we bridge social justice movements that are by and for the communities they serve. And often those are the communities that have been left out of the process of capitalism, frankly. And actually capitalism has been built on the backs of a lot of those folks. And so bringing those people into the system is part of what we do here. And I am Renee Morgan, your social justice director, who actually is that person that is the bridge between social justice movements and Adasina capital markets, and getting capital markets to work in service to the social justice movements and issues. So let's do a quick just round of introductions. That's who I am. Rachel, did you want to go ahead and introduce yourself first?
Absolutely. Thanks, Renee. I'm Rachel Robichoti. I'm the CEO and founder of Adasina Social Capital. And Adasina is headquartered in San Francisco, though we have staff all over the United States and social justice partners around the world. It's important that I acknowledge the traditional holders of the land on which we work. In San Francisco, that's the Ohlone, Ramaytush, and Mulikma peoples, and I recognize their continuing connection to the land, waters, and culture. I'm paying respect to their elders, past, present, and emerging. And I will invite Jim to introduce himself.
Thanks very much, Rachel, and thanks, Renee. So my name is Jim Thomas. I go by he, him pronouns. I was actually involved in developing the extractive agriculture dataset that you're going to hear something about in my previous role as research director of the Etc. Group. These days, I'm helping develop a new initiative that we're calling Arcadia. It's the Research Collaborative on Agroecology and Defunding Industrial Agriculture. We won't talk about that so much here. And with NGOs who are working together to create investor exit lists for divestment purposes away from agribusiness and extractive agriculture, something called GAEL, the Global Agribusiness Extraction Exit List. That's held by Friends of the Earth US. I'll hand over to Kavya.
Thank you, Jim. I'm Kavya, and I work as a researcher with ETC Group, Action Group on Erosion Technology and Concentration. And I've been working as a researcher with them for the past 2 years, and I was on the team for Food Barons 2022 and the Extractive Ag Screen. Thank you, Renee.
Thanks so much. A quick housekeeping thing. The chat, you may or may not have noticed yet, is disabled. So we're going to take questions through the Q&A. So go ahead and post any questions there, and we will get to as many as we can in the hour that we have. And we will end on time. We know how Zoom life is for everybody out there. So without further ado, Rachel, can you kick us off by talking a bit about what social justice investing is, like how we got here?
Sure, and I'm going to share my screen. So at its most basic, social justice investing is bridging social justice movements and financial markets. And at Adasina, we do that in two ways. One is by partnering with the social justice movements. We have some of our social justice partners here from ETC Group. And the other work that we do, you can see on the right-hand side here, is mobilizing investors. And we're mobilizing investors specifically to work in a collective way in solidarity with the social justice movements. What we do in our portfolios is this deep integration of racial, gender, economic, and climate justice, both the metrics and the data, into our portfolio creation process. So one part of impact investing is like, actually, how are you investing? So you'll be hearing today about extractive agriculture and how we've incorporated that into our investment process. The other the really important part of impact investing is the impact portion. And there's a couple of ways of making impact. One way to make impact is to have an impact on companies within your own portfolio. And that definitely impacts company behavior and is important, but it is limited. It doesn't necessarily impact the broader investment ecosystem. So what Adasina does is we're actually focused on that broader investment ecosystem. So we do events like this to educate investors. You'll be hearing about some of the impact tools that we'll be sharing to empower investors to take action on extractive agriculture. And this is an investor mobilization event. So you're here to receive that education, those tools, and we'll be doing continuing work around extractive agriculture. This is kind of our first more public step in that direction for this particular campaign. And what that means is that when we impact company behavior, we're not just impacting the behavior of companies based on what we're doing in our own portfolio. We're actually leveraging all of you to join us in a collective effort to impact these companies, whether we do that by not having them in our portfolio or engaging with the ones that are in our portfolio. Either way, we'll be giving you tools that will allow you to do that. So that is what we do. And one of the most important things we do from an investment perspective is we go first, which is something we talk about in the investment world. There is a very big rush to go second. So it's really important that we're the first to invest based on certain social justice metrics. And that is definitely true for extractive agriculture.
Thanks, Rachel. So what is extractive agriculture? We're using this term a lot, and this felt really important to have this first one of a series, I hope, talking about extractive agriculture to define what it is. And so, Jim, can you give us like the overview of what exactly is extractive agriculture in the
Sure, yeah, I'll have a go. And I'd actually first like to acknowledge that although by that term, extractive agriculture, it sounds like something abstract or large, we're talking about something quite actually intimate and personal, which is food. That food is something that has deep emotional, cultural, and of course health and security meanings for all of us in different ways. And everyone has a relationship in different ways with how it sustains us, affects us, how we have the right relationship or not enough food. So this is something that's comes with all sorts of meanings that I just want to acknowledge about the natural world, agriculture, and food cultures. And really what we're talking about here is the question of where food comes from. And everybody on this call, I'm sure, knows very well, food doesn't just come from a grocery store or a restaurant, but behind that, there is this bigger apparatus of production, trading, processing, selling of commercial food, which actually is about a $13 to $15 trillion apparatus that, it's about 10 to 15% of the global economy. And that when you size up all those activities that bring food to us, or to some of us, it's a pretty intense system that we often call the industrial food chain. And when we're talking about extractive agriculture, what we're talking about is the way that the industrial food chain, in bringing food to consumers, extracts energy, extracts labor, extracts minerals, water, and extracts resilience, actually, away from nature and society, often in very inequitable and unsustainable ways. So Some examples. The industrial food chain is responsible for about 1/3 to 1/2 of all greenhouse gas emissions, depending how you count that. The oil that it takes to bring food to the table of an average American consumer over a year is about the same amount of oil that they pour into their car every year. It uses about 70% of fresh water extraction. We're talking about 75 million hectares of forest every year being cut down. We're talking about 4 million tons of toxins that are being released into nature through the industrial food chain, and particularly into our bodies too, particularly fence-line communities, poorer communities of color and the more vulnerable. Transforms biodiversity to monoculture. We see land grabs, dispossession. And one thing that I would really emphasize about the industrial food chain, there's a tremendous amount of violence in this chain. Including gender-based violence against migrant and marginalized food chain workers, in the grabbing of land and so forth, against peasants and fisher folk. This system, the industrial food chain, has really many multiple types of harms that are associated with it. And I think though and many of you will know about those, but I think what's often not apparent to at least people like me from more urban and northern situations is that there isn't actually one food system. There's two. And I think this is a really important thing to dwell on for a moment. That food system of monoculture farms or processed food and so on, that industrial food chain, actually that's not the one that feeds most people on this planet. At best, that food chain feeds maybe 30% of people in the global population. 70% of the world is fed primarily in a different way. So from small farms and gardens, from gathered and fished food, community production, farmers markets, territorial food webs. And that other way, that food web, if you like, not the food chain, relies on only 25% of available land and resources. And it uses all kinds of diverse agroecological, that's a term we'll hear again and again, arrangements embedded in very diverse communities. And so to go to the question of what is extractive agriculture, what are the things that are different about the chain versus the web? What's different is agribusiness. Agribusiness, which is a term that really only came about in the last 60 or 70 years, is different from agriculture. Agriculture is the way we turn nature into food. Agribusiness is the way we turn nature into profit, into value for investors. And at its core, agribusiness is led primarily by trying to extract value first, and then siphoning it off elsewhere. And in so doing, it often externalizes the social and the ecological costs of that. And this is really clear when we look at this vast and complex industrial food chain that's been built over the years, with these long supply chains, speculative commodity markets in food, environmentally damaging inputs such as pesticides, and often socially damaging labor and ownership practices. And all of which may be extracting value to some investors and some companies, but is really having a crippling cost on the earth and people's health and communities. And it's actually incredibly wasteful. For every dollar that's spent in the industrial food chain, there's $2 in trying to clean up the mess and health and environmental costs. And it's incredibly concentrated, as we're going to hear in a moment from Kavya. But society kind of tolerates that, or has tolerated that, because we believe that food chain, agribusiness, is somehow feeding people. And the thing is, it's not. That social contract was never actually fulfilled. In the shadow of huge corporate agri-food profits that are still coming in, 1 in 3 people globally are food insecure, and around 10% are flat out hungry. And so, the system may feed investors or profits, but it starves people. And remember, this chain really only addresses 30% of the global population anyway. And in the same time, as it takes from the land, from the atmosphere and so forth, it harms the systems that actually do feed people, the food webs. So when Etc Group was asked to define what extractive agriculture meant for this data set we developed for Adasina, it actually was quite easy. It was the industrial food chain. And the way in which that food chain and the companies who are driving it have restructured our food system away from the food webs that actually feed people. I tend to believe, and maybe hopefully others do too, food shouldn't be like that. That food is more like health or education or conservation. That it's actually a human right. And the way that investment in food systems should be is it like a social infrastructure, not as a commodity that you're extracting profits from. And particularly in this century of mounting crises, when people really do need access to healthy food, they need less carbon in the atmosphere, and we need to get serious about restoring nature. Continuing to finance agribusiness and that kind of extractive model is really indefensible. I don't know if that answers your question. Right?
Yeah, yeah, thank you. Yeah, and I know that was a lot for those listening. I know that was a lot. Like, and I think we had a similar experience when we took on extractive agriculture. Like, this is so massive. Hearing like everything that Jim just described, that the system is massive, and we're really talking about an entire food system and how to structure it in a way that feeds the world in a sustainable way. And so I'm going to shift to Kavya to talk details about the research, but I also want to acknowledge that we know that we are also investors, and that we have taken all of this information from ETC, and I believe the Food Barons report is in the chat so that the audience can see it. It's 150 pages that outlines all of the information that Jim and Kavya have spent, a year doing the research on. And then we have distilled it down and will present it in a way that is useful for investors. So stay tuned. But I want Kavya to have a chance to talk more about the report itself. And then Rachel will outline like how can we use all this information now in a way to be helpful to the world and investors.
Yeah, thank you for the question, Rennie. I'll just take a second to share my screen. Can you see it? Yes.
Yep, very good.
Great. So I'll share a few key takeaways from our report, Food Barons 2022. The first one was that we saw growing corporate concentration at each link of the industrial food chain. The top 4 companies own 62% of the global agrochemicals market, while just 2 companies control 40% of the global seed market. Globally, we saw that just 3 companies control the vast majority of poultry genetics, making it the most concentrated sector in the industrial food chain. In the US, Biden administration briefing stated that just 4 firms control approximately 55 to 85% of the market for beef, pork, and chicken. Now, why this is bad is because when a handful of giant companies are allowed to dominate in uncompetitive markets with little regulatory oversight, they can and they do use their market power to raise prices, which many claim is what happened during the 2008 food price crisis and the role of the synthetic fertilizer industry. They can dictate the research and development agenda, as can be seen in the undue focus on GMOs and glyphosate and now the digital platforms of these companies. They can have a monopoly on technologies, which is evident in how Corteva, the second largest seed company, is one of the dominant actors in the patent grab on CRISPR, which is a gene editing tool. And they can maximize their own profits while continuing to extract value from farmers and consumers by charging high prices, causing erosion of seed diversity, increased farmer indebtedness, water and soil pollution, deforestation, and contributing immensely to emissions. Another takeaway was the prevalence of horizontal shareholding and the increasing involvement of asset management companies in industrial food and agriculture across sectors. Horizontal shareholding is the practice of owning assets in multiple corporations that are supposed to be competing with each other, but are unlikely to compete if they have common owners. A small number of giant investment firms had significant horizontal shareholdings in and across many of these sectors, which creates the semblance of competition, but diminishes actual competition. Thirdly, we started noticing that these corporations are now using digital tools to entrench control across the industrial food chain. These sectors, these companies are responsible for a large chunk of agricultural GHG, greenhouse gas emissions, and to evade criticism for their terrible performance on the climate and environment front, having been linked to illegal deforestation in Amazon forest, groundwater contamination, rising emissions, the corporations are now using strategies like carbon farming to earn green credentials. For example, carbon farming schemes like Bear Carbon or Kargil Region Connect, which claim to provide farmers extra income for sequestering carbon into the soil, are actually ploys for the corporations to pay farmers paltry sums to practice and to continue their input-heavy industrial farming methods. These schemes take data from farmers using company-owned digital platforms, lock farmers into agreements that require the adoption of very specific farming practices and technologies owned by these companies over a period of time, and generate carbon credits, which are in turn bought by these companies themselves. The scheme allows Big Food and Ag to keep a stranglehold over farmers by requiring them to use the company's technologies and products while keeping fossil fuel dependence across the supply chain. These are some of the ways in which the diverse, long-proven agricultural practices like indigenous mixed cropping systems, diversified and integrated farming, and many agroecological practices are ignored and further marginalized. Let us not forget that 70% of the world is fed by small farmers. These are the farming systems that are at risk by the control that is held in the hands of these very few corporations.
Thanks so much, Kavya. And thanks for all your work on that report. Rachel, do you, I'm gonna sort of pivot and go a little micro into the investing world now. So what do we do with all this information? How should we define that as investors and move forward with this information?
That's kind of the hard work, right? Is figuring out what can investors do to have a meaningful impact. And so what Adasina has done is develop a definition of extractive agriculture for investors that includes the industrial agricultural practices that extract unsustainably from people and the planet. So we're looking at these most harmful aspects like corporate concentration in certain industries. And we'll put these in the chat, but the industries that we're really looking at for these harms are agrochemicals and pesticides, synthetic fertilizer, commercial seeds, livestock breeding and genetics, the agricultural commodity traders that Kavya kind of brought to light, gene editing in food, and industrial livestock and meat processing. So it sounds like a long list, but it's really a list of like, where are the harms coming from? How are investors in capital markets kind of like continuing to fund and capitalize the companies that are doing the most harm? So really targeting those particular industries and particularly the corporate concentration in those areas is going to help us move in solidarity with and align with social justice movements.
Thanks. Yeah, Jim, correct me if I'm wrong, but I feel like one of the stats that I've come across is the 3.5 trillion goes to 100 companies. Is that?
Actually, that was something that we worked out based on the Adasina data set that we developed. We found that yeah, roughly about 3.5 trillion in sales go to the top 100 companies.
I just think that's that's a way to sort of highlight the concentration as well. So Jim had mentioned a bit about like, why should we care? And I think outlined some of the bigger harm. Rachel, did you want to also point out a few other pieces of the harm that's the system is causing?
Yeah, I think that Jim and Kavya really highlighted basically why anyone should care, like why as a human being you should care. I think that there's three particular reasons why investors should care. First of all, it's unsustainable because it doesn't actually work. And I'll talk a little bit more about that. Second is that it's bad for the planet, which we've already heard about somewhat. And lastly, because it's bad for people, especially women and girls and BIPOC and economically disadvantaged communities. So if you're a social justice investor, you probably care a lot more about it being bad for the planet and people. If you're an investor at all, whether you are values aligned, ESG focused or not, if what you want is long-term sustainable returns, that comes from investing in sustainable companies with sustainable practices for the long term. And what has been brought out here already is that, sustainable and local farming, the agroecology is something that is doing an excellent job of feeding 70% of the world and only using 25% of the resources. That is inherently a system that can regenerate itself, and a system that is feeding only 30% of the world, but using 75% of the resources is absolutely unsustainable. And we've seen this kind of math before. Whenever you have these unsustainable practices, what it requires is extraction from people and the planet, right? So I just want to pivot for a moment. Our attendees are almost entirely from the United States. I'm a Black person, descendant of slaves. I want to talk about the foundations of the United States and them coming from the dispossession and genocide of indigenous peoples here. And most of that began and was kind of like the rationale for it was because we needed the land, right, for primarily for agriculture, particularly think about the American South. And that agriculture, that monocropping of things like cotton and tobacco, is actually something that was not regenerative and required slave labor, right? So you have stolen land, you have stolen labor to support a system that does not regenerate, that isn't working well. And once slavery ended, it turned into convict leasing. If you think that's over, I'll just let you know that one of the largest pieces of agricultural property in the country that's publicly owned is owned by the Department of Prisons in Texas. So it's not over yet. And even once convict leasing and prison labor maybe became less palatable, we have discovered undocumented immigrant labor. And we know the working conditions, both in meat processing plants, for example, but also in the fields that that we know have a severe impact on people that come from more vulnerable communities. So I just want to highlight, we don't connect those very often, but I think it's really important to highlight that this is an issue not only of climate justice, but of racial justice. And I don't want to leave out gender justice where this is concerned. The pesticides and agrochemicals, women have a higher susceptibility to overall health impacts that's been documented, and particularly also reproductive damage. So working in the fields and living in the vicinities of crops actually can lead to direct endocrine disrupting activities within the bodies of women and girls. In addition, extractive agriculture is responsible for massive deforestation, which leads and displacement, both of which have disproportionate harms and gender violence that ends up occurring on the bodies of women and girls. So when our social justice partners, including ETC Group, Friends of the Earth, and many others, when we ask them what's at the intersection here, like we want to walk through the door of climate justice, but deal with the issue that has deep racial, gender, and economic justice overlays, it was very clear that extractive agriculture was the place to focus. It's where we're going to get the largest impact for any of the campaigns that we could have launched. So I think that's why investors should care. Bigger picture.
Yeah, I'll also say that in, globally, this impacts farmers in the global South, which is also a geographic and racial justice issue, along with 73% of most ag workers in extractive ag, industrial ag, are immigrants or migrants from Latin America. And it's like always one of the most dangerous jobs listed by the Department of Labor. So it's, again, a racial justice issue here in the States and globally, with all the history that Rachel just stated as well. So what can investors do?
Well, let me just start by, I know I've been doing a little bit of like, here's how Adasina works and why we're bringing this forward. So let me start by just giving you a brief overview about how we build our social justice investment strategies. And then I'll kind of talk about what some of the tools are that you can look forward to. Let's see. So bigger picture, when we build our public equity strategy, we start with over 9,000 global all cap stocks. And we look at our social justice investment criteria. We have 40 different ways of measuring 40 different ways of measuring racial, gender, economic, and climate justice broadly. And we use 80 different data sets, right, to get right down to the specific issue. Some of these data sets, this is come directly from our social justice partners. That's our primary data. And in this case, this is where we are. We're saying, hey, we got the community source data. And this community source data is something that we're going to share with you. So if you go to the website, Bridge Justice, we just launched that. There's a press release about it. There's a website that we'll put in the chat. If you go to Bridge Justice, you can find ETC Group's broader data set around the industrial food chain. And you can also find Adasina's extractive agriculture data set showing like how investors are using that data to particularly identify the companies doing the most harm inside of public markets. So we can use that data, and investors have choices. They can choose not to invest. If you're an Adasina investor, then then those companies would be removed from the portfolio that are on the Adasina extractive agriculture data set. There are also investors who, for a variety of reasons, let me see, have I stopped sharing my screen? Yes. Okay, there are investors who, for a variety of reasons, will need to remain invested, and their approach to impact is by engagement directly with those companies. You'll need to start by identifying who they are and what the harms are. So that's something we'll be working with a broader coalition that we'll be bringing together to address. We'll be looking both at like, how do we use this data for divestment and also for engagement purposes. One of the ways that we help people with engagement and divestment is you need a rationale. You need us to make the business case for you. As you can see already with some of the things that we've highlighted, it's not a hard business case to make. This is an unsustainable practice. It's bad for vulnerable communities. It's not going to work long term. It's bad for humanity. So you have to look forward to, in the near future, a collective investor statement. And let me just tell you about the power of these collective investor statements. They end up forming the basis for shareholder proposals that people who are engaging bring to the companies. So in order to mitigate the harms if you're a shareholder, they also form the basis of investment committees and investors, once they can see the business case, choosing not to invest. So part of what we're wanting to do is stop flowing capital into an obviously harmful system. And that investor statement is going to give you support for both. So we're going to encourage you all here to be signers of this investor statement. We will be looking for feedback and following up with you to make that investor statement like the most compelling business case that can be made while also being succinct. We'll see how we do. And please, you can go today and get access to the data, look at your own portfolios. And if you invest with Adasina, this is already integrated into the portfolios that we produce.
Thanks, Rachel. And you can always reach out to me at Adasina for any more information, or you want to talk about your portfolio or just really anything with this topic. We have a lot of questions from the audience, and so I'd actually love to shift to get to as many as possible. If we don't get to your questions, we are going to be having a follow-up email, and hopefully we'll answer them and open also a line of communication to answer anything that we don't get to today. I am going to start with a couple of the questions that have come up here, and then also lots of you submitted them on your registration form, which we super appreciate. Let's start with the first one. Jim, you had talked about this being a great question. How do you shift from agribusiness to social agriculture?
Yeah, it's the $15 trillion question, basically, and $15 trillion because that's roughly speaking what the industrial food chain gets every year, and the question of how do you move those funds towards the food systems that work, the food webs, the community supported agriculture, the agroecological production is I think, to me, it's the biggest question we have to answer. The thing that I think is, as I mentioned before, and Rachel mentioned before, that's just so important to grasp is this is not like dealing with energy systems where there's a need to create an entirely new energy system. This is a situation where 70% of the world already is primarily fed by what are actually not bad ways of eating, by agroecological production, and that's a term that we're using here quite a lot. Maybe we'll come to that in a moment, and by territorial farm food markets, where food is produced locally with communities, where you share seeds and tools and knowledge and so forth. That exists, and the task in front of us to shift to that is actually about liberating those existing systems. It's about removing the agribusiness power that has grabbed 75% of land and water and its resources, removing that, and instead redirecting towards long-term supporting investment towards seed systems and community-based farming and so forth, diverse. The thing I would really also, and this links to something that Rachel said, agribusiness has built up such tremendous power and resources through theft. It's through exploitation and violence against BIPOC people, against indigenous people, against women. And the most important thing is that transition has to start with equity. It has to start with acknowledging all that has happened before and talking about reparations. So if we're going to ask how can we shift to that system, we have to first acknowledge that land was taken, that people's lives and health were taken, and there's actually the very first investments that need to happen need to be in giving land back to Black and Indigenous farmers, to communities in the developing world, and so forth. So that's actually the first step, and then the more we can remove funds that should not be going anyway to agribusiness and help put it into diverse agroecological production systems in territories, then we can liberate that already existing ways of making food.
Thanks. And I think there's at least something I want to acknowledge is there's two parallel things that can be happening at the same time when it comes to this topic. And one is similar to some of the things that Jim just said. We think of private markets because we think small and local. And certainly I think that has a place. I think that has a place in private markets are one of the bigger markets, the most growing markets. But we are public equity investors. So there is also what Rachel had mentioned, that even if it's about not investing in the biggest players, and as Kavya so eloquently kind of showed us how concentrated everything is, that there is this idea around starving the beast in transitions, right? That like if we're trying to stop the most harm and then increase like a different transitional type of food system, as a different type of transitional food system can be created. And so in public equities, I think about that a lot, about just investing differently. There are still public equities, they just might be smaller. They don't have to be the top 2 or 3. And if they are, and as Rachel said, like also engaging with those, but really like starving those systems, the big systems that's in place right now, causing the most harm. And then Kavya, do you want to take, there's a question about, and I'm just going to read it verbatim because it gets a little bit deep in the weeds here, but the key question on soil carbon sequestration is not who gets the credits nor whether it's a large or small company. It's whether the net effect actually reduces greenhouse gas in the atmosphere. So corporate concentration can certainly be a bad thing, but not necessarily for carbon capture. Do you want to address that?
Yeah, thank you for the question. And from the top of my head, I have 2 points to make. The first is that these carbon sequestration schemes exclusively promote industrial farming methods in a lot of cases. They're promoting monocultures, and the schemes run by these big ag companies promote their own products. So they'll ask you to plant their own seeds and buy their own agrochemicals, and that is the only way you can be remunerated. Right, and the way to and the method they prescribe is kind of dictated by them. The kind of agricultural practices for soil carbon sequestration is decided by these very companies. And the second is that there's not enough scientific consensus on the potential of carbon, the potential of soil to sequester carbon. And there's another point, the third one that I would like to make is that through these schemes, these companies are collecting extremely valuable farm data, and they're also promoting their products. So that is further increasing their control on what is actually happening on farm, what are farmers sowing, what are they spraying, and what is the yield. So we have to look at it from a broader perspective and not from a simple carbon sequestration, view.
Thanks so much. Jim, did you have a further point, something about the energy?
Yeah, I absolutely agree with what Kavya just said about this. Actually, the science on soil carbon sequestration has been really changing in the last few years. But on top of that, a lot of these schemes don't measure or account for the energy of digital systems. In order to do this, you have to have sensors, you have to have large-scale digital counting systems, you have to have digital agriculture, and that's actually in itself, energy, a massive amount of energy. So, when you begin to look at what the infrastructure to carry this out emits, the benefits kind of fall away.
Great. I do want to get to a question. I know we're coming up, we have about 15 more minutes, but I want to make sure we cover this. One of the things that we really wanted to talk about and cover in this webinar is just some languaging. Like, we have some traditional language in the ESG space around sustainability or regenerative, but we really want to start talking about what extractive agriculture really is, and the solution to that, or at least the positive piece of extractive agriculture would be agroecology. And I'm wondering if we can just define that. Like, how do you all define agroecology? I think I already mentioned that one of the things I think we can do as a public equities investor is like that starve the beast model, like to shift some capital from the large players that are really limited to the smaller players that are causing significantly less harm. And as Rachel said, engagement is also part of that, but really start acknowledging the power differential there, that there are a few players in industries with hundreds of companies. There's only 2 or 3 or 5 or 6 that hold a tremendous amount of power, and really start looking at that as investors in public equities. And while that might not be agroecology, I think that's a harm reduction model that is important in this process. And then there's also agroecology that, Jim, I'd love to hear from you on that.
Sure. And I've noticed, spending a little bit of time in this sort of finance world around food, that often you'll hear about regenerative agriculture and food. And that's a term that isn't very well defined, and unfortunately is being used in a number of different ways. And I think that referring to agroecology is much more useful, because actually agroecology as an approach is coming out of food movements. It's really developed by particularly Southern food movements, sustainable food movements. It's been very much defined by the Food and Agriculture Organization. There are key principles of agroecology. And it's also a term that's now being used in international negotiations. I was just at the Convention on Biological Diversity, and the Global Biodiversity Framework now talks about the importance of investing in agroecology for food production. And agroecology is about food that's grown in in an ecological way, but also within the cycles and ecosystem approach of nature, but also with farmer knowledge and cultures right at the heart of it. So it's very much connected to the very diverse ways of creating food. It's not a single approach. It's really about harnessing traditional and place-based, ecosystem-based ways of producing food and sharing food with the farmer and the community at the heart of it. If that gives some sort of definition.
Great. Kavya or Rachel, was there anything to add, or do you feel like that covered it? Okay, great. I just wanted to make sure. I feel like there's several versions of a question that are coming up in the Q&A that are similar. I'm sort of seeing a similar theme, and I'm gonna condense them, I think, into one question: is this scalable? Like, is that when we talk about a new, like, getting out of agribusiness and shifting to agriculture, and I think it comes to one of the questions we had talked about that somebody sent on in with the registration, is like, in a perfect world, what does effective and sustainable look like? And I think you have touched on it, Jim, but the question is coming up in a variety of ways live, is like, is this scalable? Is this, how do we support local farmers? Is it something that could be incentivized in a larger way, that kind of thing? And maybe Rachel, but since that's also a financial question, how we may see that.
I'd definitely love to have Jim start out.
I think this is the topic that the global food movement, food justice movement, food sovereignty movement is most engaged with. You know, and I should say that the food movement, which is billions and billions of people and peasants and farmers, is highly propositional and very practical, because it is delivering food and food systems to people all over the world. The focus really is about territorial food systems and territorial food markets. So what that looks like in the global north, in somewhere like the US, is how do we build food hubs so that in urban centers or in rural places, food can be gathered together and shared out. How can we build community supported agriculture? How can we build co-ops? How can we set up standards and so forth? There's just so much going on around territorial rebuilding territorial economies. And I think from an investor point of view, there's a lot of value in supporting territorial economies where the more money you put in locally, the more it builds up economic activity rather than sending it, you know, abroad. So there's a lot going on. And it goes back to that key point. These systems exist. They feed 70% of the world. What we need to be doing is just letting them breathe, letting them have the basic resources, whether that's giving land back, making sure there's infrastructure for seeds or for sharing tools and so forth. And our food economies will flourish. People are deeply invested in them.
Yes, I also think that, just to be perfectly honest, we're all a bit victims of the last several decades of agribusiness having a really great PR campaign telling us about how they're feeding the world and resolving issues of hunger. It's not actually true. Like, the food web is actually feeding 70% of the world. And if you've moved in the direction of eating food without pesticides and synthetic fertilizers, moving more toward organic, you're in your personal life, it's not such a strange idea. You're moving in the right general direction. If you've moved more toward locally sourced, you're moving in the right direction. These are not strange or unusual ideas. We've already started building, even in the industrialized world, even in the United States, we've already started building out, like the slow food movement, right? And regional and local, like community supported agriculture, community supported kitchens. We've already started building these out. What's happening is that the high concentration in agribusiness is doing things that are actually disruptive. Let me give you an example. You have a local farmer. They are not using commercial seeds. They're using, heirloom seeds. what ends up happening is that a large publicly traded company is producing seeds and wants farmers to keep coming back to them year after year. So they create terminator seeds, seeds that don't regenerate. Now, we all know that the same way smoking doesn't stay in the no smoking section, that because of pollinators and any number of other reasons, like the terminator seeds and their genetics don't stay in the publicly traded companies like slot of land in the agricultural country. There's contamination that actually impacts people who are engaging in more of these agroecological practices. They can't have the contamination from the commercial seed producers. You have the same thing with the agrochemicals and pesticides. You know, like the pesticides and agrochemicals don't stay just in the agricultural area that the publicly traded company that's using them has where they've been sprayed or put onto the soil. So I just want to open our minds for a minute and say, I think a lot of us here have chosen to eat differently, kind of in the slow food movement. And so it's not a strange idea. As Jim said, it's letting those practices thrive and breathe without us continuing to fund the large corporate concentration that is bringing about the harms that undermine, right, this agroecological food movement that we're trying to build. And it already works. I think that our questions about scale are like the fear that has been brought about by this idea that agribusiness is actually feeding the world. What it's really doing is mining calories unsustainably, and that's not good for us as human beings.
So Rachel, I'm going to shift a little because we're getting close to the top of the hour. So one of the questions is, does Adasina have plans to release an ETF based on extractive agriculture exclusively?
You know, every time we have, yeah, so short answer is no. Every time we do work on Indigenous people's rights, racial justice, specifically investing. Our hope is that you come to Adasina and our products through the door that interests you most, whether it's racial, gender, economic, or climate justice. But our hope is that you start to understand that these issues are inextricably linked from one another. You can't deal with this issue of extractive agriculture without being someone who's also addressing issues of severe racial and gender, right, injustice. So we don't want to siphon off these issues. We actually designed our strategy to be a full replacement for investors with social justice values, so that you may come in through the door of one of the particular justice areas that we focus on, but the entire portfolio is actually operating on the thesis that social justice movements are giving us early indicators of risk. And no matter what kind of investor you are, you're going to benefit from that long term, kind of getting early indicators of risk.
Yeah, and it's been asked several different times in the live, and the questions that came in is about how we use these strategies in the portfolio. And then I want to reiterate to go to bridgejustice.org to find, because I think everything that Rachel just said is really encapsulated in that site. You can see the things that we screen for and how these issues really overlap through racial, gender, economic, and climate. But did you want to, can you speak a little bit about like how we use this in our portfolio, just to answer some of the questions?
Yes. So we, our portfolio in particular, so this is the part about how we invest versus like very specifically how we're choosing to make impact. So how we invest is that we do not invest in these particular companies. And we also are forming and have already started to form, but you'll be hearing more about it with the collective investor statement, a coalition of investors who will be leveraging this data both to divest and engage. We'll be working directly with the social justice partners to determine what good looks like in terms of engagement there. But if you are an Adasina investor, whether you're an investor in Adasina's exchange traded fund, which you can buy anywhere you can buy a stock, or if you are an investor because your financial advisor has you on one of Adasina's separately managed accounts, this has already been baked into the portfolio. We don't go live with these types of new social justice metrics unless and until we know that it's investable and we've actually included it in the portfolio. So that's how we are addressing extractive agriculture. And on the impact side, we're looking both at the data for divestment and engagement.
Thanks, Rachel. And then Jim, do you want to answer a bit about the agroecology, how to support the agroecology sector?
Yeah, so I would point people towards the Agroecology Fund, which is actually a pooled fund of, I don't know how many it is now, probably a couple of dozen, mostly philanthropies, but there are a number of impact investors and so on who are holding that fund, and which really focuses on putting money exactly the right place to build agroecology globally as a movement. And I know the Agroecology Fund would be glad to have, I imagine, conversations with investors who want to see how they can support that. The Agroecology Fund has been supporting meetings in Africa and elsewhere around building these agroecological territorial entrepreneurship and territorial markets. So they have very specific ideas. I can put it's agroecologyfund.org. And there's really good initiatives like people are familiar with the Transformative 25, which is being supported by integrated capital investors. We could put that link too. Many of those are often peasant and BIPOC-led initiatives to support agroecology. So there are a number of another initiative to look for is the TIFS initiative, the Transformative Investing in Food Systems initiative, TIFS. That's another useful initiative for investors to look at.
Thanks, Jim. I'll double back and lift up what Jim just said about the Transform 25, which we are going to put in the link live. They have a report and webinar that's coming out, I believe, next week. And there's lots of friends, and like I said, these are parallel things. This is not one or the other. This is like when we talk about the type of agroecology that Jim was just speaking of, and we talk about the Transformative 25, that is more local and private investments and philanthropy, and that's important. That's an important part of some people's portfolios. It is also not something that a lot of people have access to or may not participate in. And so Adasina is your public equity solution, and then so that's both and is what I want to say. And what I do, the Transformative 25 has just Rachel spoke a lot about the beginning of agriculture in the United States to what it is now in this agribusiness way. And there's a reparations lens in the Transformation 25 that's really vital and something that we support as well. So I just want to mention both of those, that depending on where your money is and how you invest and who your clients are, there's both solutions, there's both answers, and we need everybody moving forward together to create a regenerative and this like more sustainable system for us to survive in. So we are coming up at the top of the hour. I am going to do a very quick spitfire. Do people have final words on the panel before I fully close this out? Rachel.
Yes.
20-30 seconds.
If you care about investing in a way that most impactfully targets climate at the intersection of racial, gender, and economic justice, this is your issue. Join us. We will be reaching out to you, sign the collective investor statement, be part of the investor coalition that is working to bring this into public markets.
Jim, you want to say 10-20 seconds?
Yeah, I think just echoing what Rachel said, this is the beginning. I think everybody involved in food system issues knows there has to be a transformation in our food systems. That transformation has to be from the problematic food system of the industrial food chain to supporting the liberation of the food webs. And that is important to keep that's the transformation that we need, and any help we can have from investors and others to make that transformation is let's strategize together.
Yeah, and on that note, I want to mention that this date and this week wasn't arbitrary for us, that we've been talking about that Adasina is a social justice investing firm. It's really important for us to center those people that are most impacted by the harms that capitalism often is the perpetrator of. And this week on August 17th was International Peasant Struggle Day. And peasant food is a term that's used in the global south. It's not so much used here, but it really is that 30% of the world that is feeding 70% of the population. And so we really want to align with that and lift up our work in service to them and lift up that resilience and the wisdom that we need to really for us all to survive. So with that, I want to say that we are going to be sending a follow-up email. We will have a recording. We'll have a couple questions. And for those of you that are on in the investing world and in the ESG space, we are building a coalition. I mean, Jim and I have been building a coalition of international folks on the social justice side, and we will be organizing an investor movement here so that we can bring this to the market in a much larger way and have some impact. So I hope you all will join us. And yes, coming soon, the investor statement and such. Thanks everybody for your time. I know an hour out of the day is a lot. So I appreciate you joining us, and stay tuned from us.